This is Teresa Clarke with Africa.com. We are here today unpacking the Mercer report with Standard Bank Corporate Investment Banking Chief Executive Kenny Fihla. We are very excited to talk about what is such an important topic to the continent and something that is just central to every aspect of development. We can't have a conversation about moving forward without understanding what is happening on the continent with respect to the ever important topic of infrastructure. And we're very fortunate to have someone here today who has a deep background, a deep history, knowledge, and experience around financing infrastructure on the continent, and who can provide tremendous insights for us on this important topic. So Kenny, thank you so much for taking the time from your busy schedule to speak with us and our listeners today.
No, thank you for having me, Teresa. I look forward to our conversation.
Well, let's talk about the release of the Mercer report. Let's start for those who may not know what the Mercer report is, and tell us, what is the Mercer report and why is it important?
I mean, this is a very important report in that it looks at the opportunities and challenges related to Africa's infrastructure. And it is a follow-on report to the one that, or a document that was published in 2018 by Mercer and Media Advisors. And there are various elements that one needs to emphasize when looking at this report. I mean, the first is with regard to the changing sort of dynamics from an urban population point of view, i.e. the rate of urbanization within the African continent. The second is the population dividend, the fact that Africa has a higher proportion of younger people, which on its own creates massive opportunity from an education, economic growth, as well as prospect for development. And the third is the infrastructure that is required to support a growing population as well as an increasingly urbanizing continent. And on that basis, then makes the case for infrastructure investment in Africa, as well as investment in real estate sort of development.
So this report has been produced year after year, and you sort of look at it when it comes out every year to see what has changed?
It gets produced on a regular basis with a slightly longer interval, than a yearly sort of revision. And yes, we do sort of look at it quite closely because it gives us a sense of emerging trends. It also highlights what the challenges are, and which tend to present opportunities, in themselves, and also helps us to understand where the gaps are, where we think there's a massive opportunities for investors outside of Africa to play a part in helping Africa in its own development.
Now, you've mentioned MEDA. What is MEDA?
Well, MEDA is, let me take a step back and just to explain the sort of the three sort of partners in the sort of ongoing work that we're doing. The first is sort of Mercer, who is an excellent organization that has technology-driven solutions that help really to focus on understanding the various changes that are taking place in the world, operating in 44 countries with over 25,000 employees across sort of the globe. And it then leverages various expertise in helping in the management of strategy development, risk, as well as looking at some of the sort of advices that can be provided to help businesses invest in areas that may assist in creating impact investment opportunities. The second partner is Media. MEDA is an organization that was sort of founded to specialize in facilitating institutional investment and trade in Africa and other emerging sort of markets, originally founded by or came out of a summit of the US and African sort of leaders back in 2016 and originally funded through USAID, and has a team of people who are looking at broadening the partnership between Africa and the US initially, and now broadly speaking, with the developed sort of world, with the primary focus though still remaining the partnership between Africa and the US. It provides advisory services to private sector organizations who are looking at opportunities within the African continent, and from an Africa point of view, seeks to assist in the mobilization of development finance, as well as providing transactional advisory services. So we've built this three-way relationship between Standard Bank, Mercer, and MIDA, because we think that the three organizations bring different expertise and can leverage their own networks and relationships to help fast track the development and the growth of infrastructure, the development of women in particular, especially just given the inequalities that still exist in many parts of the African continent when it comes to the role of women within society, within the work environment, as well as within our own economies. And so it is something that we're very passionate about, something that started at a slow pace, but so does anything new. I mean, everything new tend to start on a slower sort of rate initially, but we're very encouraged by the momentum that we're starting to see grow and develop and the impact that this partnership is starting to make.
Now, from what I understand, and correct me if I'm wrong, MIDA brings together some of the largest institutional investors in the United States and gives them a pathway towards investing in the US and in Africa. And some of those institutions in the US are the largest pension funds that have literally billions and billions of dollars to invest, but hadn't really found their way to investing in Africa. Is that what MIDA still is today?
That is in the main, I mean, the primary sort of conduit through which MIDA seeks to sort of impact on the African continent. It sort of mobilizes and acts as a point of convergence for various, yes, pension fund, but also seeking to look at other sort of asset managers who are looking for opportunities within the African continent. Many of those institutions, I mean, do not have appropriate insight into the continent, do not have large teams that are focusing on Africa, and consequently are dependent on organizations such as MIDA to help provide that insight in order for them to be able to identify appropriate opportunities and make a difference through sort of leveraging that conduit, yes.
Okay, so that helps put in context why this report is so important. As you've just described, when you're looking to mobilize capital, I imagine the first thing that capital needs is education around the asset class and the investment opportunities. And this report does some of that?
Yeah, I think that the report, you're absolutely right. I mean, when you are wanting to give appropriate information to potential investors who themselves are managing other people's funds, we need to make sure that the information that is provided is accurate, that all the relevant facts, including risk and opportunities, are presented in a manner that makes sense, and that we also look beyond some of the short-term sort of issues, because when you talk about investment in Africa, one cannot take a short-term view just given that Africa is still in a state of flux in many areas. State of flux from the rate of urbanization point of view, state of flux from a rapid growth in the population, state of flux with regard to the massive investment and development that is required from an infrastructure point of view, state of flux with regard to the maturity of the regulatory framework, and in some instances, the maturity of democracy across the different countries. So in a sense, one needs to take a slightly medium to long-term view, and the report, therefore, such as the one that has been produced by media, is absolutely important in focusing investors on the key issues that they ought to look at in making those investment decisions.
Okay, now I know there is a lot of focus on the global investors that are part of MEDA, but I understand that it's also about mobilizing local institutional capital in Africa that may not have invested in infrastructure, such as the pension funds from Kenya, as well as the Asset Owners Forum in South Africa, which I understand is a group of South African pension funds. So can you talk a little bit more about bringing the African investors to focus on infrastructure as well?
Yeah, Africa is an interesting I guess, dynamic with regard to where pension funds tend to invest. I mean, many of the pension funds in a number of African countries would have quite a significant portion of their funds designated for offshore investments. And there's nothing wrong with that. But we think that there are massive opportunities that exist within the continent, particularly in the infrastructure space. But the mechanism for investing into those is usually underdeveloped, in that a large infrastructure project tends to be government driven. The institutional mechanisms through which those are done tend to be through government department or state-owned entities. Many of those state-owned entities may themselves be struggling with regard to their own internal capacity, and consequently not engaging with potential funders, particularly funders on the pension fund or asset management space. They're very good in engaging with traditional banks, but not good with engaging with other funders. And consequently, those pools of capital are not adequately tapped into from an infrastructure development point of view. I'm generalizing here. Of course, there are countries with well-established debt capital markets, well-established asset management firms that have professional teams that are always looking for these opportunities and are able themselves to identify appropriate structures through which they can invest in infrastructure development. But that's not necessarily widespread across the continent. So the work of media, therefore, in as much as it is absolutely critical in mobilizing if you like, global investment into the continent and US investment in particular, it also plays an important role in also mobilizing local investment from bodies such as pension funds. And the report, even though there's a specific target audience, the content is effectively relevant to any investor, whether they are in the US or in Africa. And we hope that this report will reach the furthest possible corners of the globe, and that other investors who are looking to the African continent will also go through it and be able to glean some insights that are absolutely useful.
So this is the first report that's come out post-COVID. Is that correct? The first Mercer report since COVID?
Yes, since COVID, yes. This is the first comprehensive report, absolutely.
And so are there findings from this report that have not followed the theme that you've seen over the last many years because of COVID? Did COVID change or impact the macro view on infrastructure needs in Africa?
I don't think COVID has changed the sort of long-term trends and some of the fundamental sort of issues that relate to infrastructure development and the funding thereof. What it has done, though, is to rather highlight and put the spotlight on how sort of poor infrastructure development can be such a major sort of hindrance, even to sort of other sort of issues. Let's take, for example, the sort of access to vaccines, the ability to effectively distribute the vaccines, the take-up rate of vaccines across the different markets, which relates then to public health, education, and so on. I think COVID has just highlighted, if anything, the importance of accelerating infrastructure development within the African continent, because at the end of the day, it is not just about infrastructure for economic growth purposes, but it is also infrastructure for social development. And poor and weak infrastructure, unfortunately, impacts negatively on both economic development as well as social development. And COVID has just driven that point even far more louder than has been the case before.
Yes. So, like so many things, it seems that COVID was sort of a truth serum that shined a light on whatever issues existed before.
Yeah, no, exactly. I mean, it also highlighted, some of the challenges with regard to institutional capacity of some of the sort of the state players who ought to be assisting in leading the various countries and societies in dealing with some of these sort of challenges that we've seen. But it is good, that these issues are becoming more and more visible and more pronounced. And at the back of that, hopefully, we will see a far greater agency in dealing with them. It's also useful in that as we speak, there's also a COP sort of 26 that is looking at the climate change, which again speaks to infrastructure development within the African continent. How can Africa be assisted to move away from huge dependence on coal for its energy generation, especially in countries like South Africa? Where will the funding come from for that sort of transition, just given the quantums that are required for a country like South Africa to be able to make the transition and so on? I think COVID is just bringing all of these issues to the fore, all at once. And consequently, I think we need to leverage this report to try and find answers to some of these pressing questions that must be attended to because they're absolutely critical to the development of the continent as well as its people.
So the Mercer report, one of the roles that it plays is making the case for investing in African infrastructure. And it looks at topics that investors care about, like diversifying one's portfolio, getting potentially higher returns, the positive social impact of investing in infrastructure. But when one thinks about this compared to, for example, other sectors in Africa, or perhaps infrastructure in other parts of the world, what is it that truly distinguishes investing in infrastructure in Africa for a potential investor? What makes it such a good opportunity?
I think that the first sort of reason is a commercial one, that there are a number of infrastructure projects and initiatives in sort of the continent that are commercially sound, have very good returns, and make sort of business sense in that sort of narrow sort of sense. But I think there's an added reason which relates to the impact that many of these infrastructure sort of projects have on economic growth within the continent, as well as on improvement in the quality of life of the people of the continent. And let me give an example just to illustrate the point. If one looks at the sort of the renewable energy sort of program that is being run by the South African government with the various sort of phases that we've seen in the last sort of couple of years. All of those projects that have been awarded are commercially viable, with massive investor appetite in all of them, from the first sort of bid date right up to the latest round that was announced a couple of weeks ago. So that's the first thing, very, very good sort of opportunities from a returns sort of point of view. Secondly, the renewable energy initiatives are sort of filling a massive gap from an energy sort of supply point of view. There's a massive imbalance between electricity supply relative to the demand in South Africa, which is why there is sort of load shedding on a regular basis, because the demand just cannot keep, or the supply just cannot keep up with the sort of with the demand. So you are all not only getting decent returns, but you are also making a massive sort of difference that impacts positively on people's day-to-day lives. And the shortage or the constraint in the electricity supply also tends to be a massive constraint from an economic growth point of view. You cannot grow manufacturing when you do not have a reliable and dependable electricity supply. So investing in these type of projects also unlock that economic potential. There can never be a more fulfilling sort of investment, I guess, reason than all of these three factors coming together in one. And Africa offers a lot and lots of those kinds of opportunities across the different markets. I think that's something that one does not necessarily find in any of the developed sort of economies, and would also struggle to find it in the same sort of combination in some of the other emerging markets. But of course, we acknowledge that for that to happen appropriately, it requires the right regulatory environment and framework, and I think many of the African governments are moving in that direction, and if anything, they're accelerating their own regulatory changes in order to make this possible, and make it possible at a much more quicker rate than was the case before.
Now, one of the barriers that the report addresses is fragmented markets, and the fact that investing in infrastructure in Africa involves looking at 54 frameworks, regulatory frameworks. And so does the African Continental Free Trade Agreement, it promises, there's big promises for many sectors in many regards to create more of a singular market. Does the African Continental Free Trade Agreement have any impact on infrastructure in Africa and making infrastructure a more attractive investment destination, or does it not relate to infrastructure in any meaningful way?
I think from a direction of travel point of view, the more we can see traction in the sort of implementation and opening up of sort of markets, both in terms of goods and people movement within the African continent, the more we're likely to effectively have that being preceded by harmonization of the regulatory environment, because you need that to be able to promote free sort of trade within the continent. I think we're still in the early stages of that process. There hasn't been any significant shift in the regulatory framework, and therefore it remains still predominantly based on national sort of priorities of the individual countries. And in some instances, these regulations are not necessarily harmonized nor aligned to sort of each other. But I think that will change with time. But it does not follow, though, that investment opportunities should wait until there's harmonization of the regulatory framework. I mean, many of the investment opportunities that are presented are ring-fenced enough to be sort of assessed in their own sort of merits, and they offer good sort of returns from a commercial investment point of view, as well as from a social investment point of view, even though they are limited to the boundaries of one specific geographies. And again, if one looks at what is happening in South Africa, the potential of the infrastructure development in Mozambique, at the back of the sort of gas fields in the north of the country, or the change in the regulatory framework that is taking place in Angola, and government divesting its own interest in many of sort of the big companies within the country. All of those opportunities are attractive in their own right within those specific countries, even before the harmonization of the regulations across boundaries. The ultimate regulations of, or harmonization rather, of regulations across boundaries, I think can only sort of add impetus to that process and probably significantly increase the scale of the opportunities. But the opportunities themselves are there, and I think they're there with very, very decent potential returns if people have structured them appropriately and have brought in the right partners in their execution.
So what would you say for an investor that was considering investing in infrastructure in Africa? And we know that there's always the same objections, particularly in the international community, around concerns about governments and corruption in Africa, because the infrastructure projects often involve public-private partnerships as opposed to investing in something that may be direct to consumer with less reliance on government involvement in order to see the return. You know, what do you say to prospective investors who I know always raise the same question? What is your answer to that?
I think firstly, Africa is not one country. I mean, we were talking a minute ago about the harmonization of regulations across the different markets. So there are different countries with different dynamics. There are countries that are well run, with much more clearer sort of regulations and rules, with a higher sort of degree of reliability from a justice sort of systems point of view, i.e. the legal regime is well known, well established, and one can predict how governments will behave, how they will make decisions, and consequently, therefore, there's a high sort of degree of certainty, including certainty with regard to sort of property rights. But there are also countries that have government institutions that are characterized by high levels of corruption, with the regulatory framework that is still in the development sort of phase, and consequently, therefore, unpredictable and uncertain going forward. So I think the first thing that an investor ought to do is to try and understand where sort of the potential sort of geography that they are targeting falls within this spectrum of stable predictability, clear rules, to state of flux, unpredictables, and the rules are a bit vague, because the different scenarios will offer different returns. And that's sort of the first thing. The second thing is to choose, appropriate sort of partners as they think about investing or doing work in those markets, which is where I guess an organization such as ourselves come into play. We operate in 20 African countries with teams on the ground We have well-established businesses. We understand the rules in those geographies exceptionally well. We understand the risks that are inherent in the various initiatives that are being undertaken by governments in those countries exceptionally well. And consequently, we can help investors choose appropriate assets in the right geographies, and we can help them structure appropriately in order to be able to manage and mitigate the excessive risk where appropriate. I think the third issue is to also take a slightly medium to long-term view. A lot of the infrastructure projects would not necessarily generate full returns, or to have a slightly longer payback period by definition, because they are large projects. They are complex from an execution point of view, because they require changes in legislation. They require detailed development of various regulations, ranging from roads, infrastructure, to a resettlement of communities, to issues related to environments, and so on. And therefore, one needs to take a slightly longer view when looking at those initiatives, which is why it is so important to ensure that you choose the right initiatives, the right projects that have a far more long-term prospects of success, as opposed to what appears to be short-term but will dissipate in the medium to long term. And we can help in the process of assessing those and ensuring that the right partnerships are developed with local players in order to mitigate some of the risks that pertain to involvement of local communities, as well as the economic development as well of local communities. I know it's a long-winded answer, but in a sense, I think that the spectrum is wide, but even within that wide spectrum, there are good countries, good initiatives, good projects, and the renewable energy initiatives in South Africa has proven that point.
Well, good. Well, Kenny, I like the way you answered that question, because you sort of brought it back to Standard Bank. And one of the things that makes this so special, and we're talking about the Mercer report here today, but we are also talking to Kenny Fihla, the Chief Executive of Standard Bank Corporate Investment Bank. And you, more so than anybody else, have great insight into what some of these actual real projects look like. So do you mind if we talk a little bit about what Standard Bank has done in funding infrastructure? I think for people on the phone to hear about what maybe one of your favorite, well, I shouldn't say you can't play favorites. I guess it's like with children, you can't have a favorite child. But maybe you want to talk about one of the infrastructure projects that Standard Bank has funded that comes to your mind.
Yeah, we have been involved in the continent for a very, very long time, and has partnered, or rather the organization has partnered with various players in the development of various infrastructure projects, ranging from the Gautrain development, which is a private a public-private partnership in South Africa relating to rail infrastructure, as well as the moving stock, which is called the Gautrain, connecting the airport to Johannesburg, to the capital city in Pretoria, and the plans now to expand that infrastructure to cover other economic centers of the Gauteng province within South Africa. It's a very, very successful public-private partnerships, which we are very, very proud to have been associated with. We have been involved in the funding of public-private partnership in the development of roads in Kenya. That program is a much more bigger multi-year program, and what has been developed so far is significantly small relative to the full scope of that program. And again, we are very, very optimistic about the potential unlock that will create to the Kenyan economy. We have partnered with the government of Nigeria in their initial attempt to privatize the electricity distribution sector, i.e. electricity reticulation. I'm saying their initial attempt because there are also lessons that were learned from that sort of initiatives, largely related to regulations, in that regulations ought to be sort of firstly transparent, and they ought to be long enduring. You can't have regulations that are attractive only in the initial stages of the project. As soon as the private sector has been crowded in, government changes the sort of the goal posed. And what was a financially viable project suddenly is no longer commercially viable because the rules of the game have effectively changed. So we've learned even from those sort of examples, and we can help then investors and show that in their contracting arrangement with government and in the conditions that they themselves put on the table, they mitigate for that kind of risk. But despite, that setback that I'm referring to, which has been a very useful learning point for us, we are still buoyant about the opportunities that are prevalent, including in countries like Mozambique, where there's massive, massive infrastructure development that is required. Again, we partnered with the Mozambican government and some of the private players in the mining sector when Vale was developing its mines and assets in that country, where they needed to develop the rail infrastructure, the road, including assisting with the expansion of the port. We are involved in some of the public-private partnership initiatives that are taking place in Ghana, again around the port infrastructure. So our experience in really dealing with infrastructure development through various sort of forms, whether it's government or state-owned entities developing directly, or whether it's through public-private partnership, or whether it's through a completely sort of outsource management contract model that we've seen in places like Ghana, and we're starting to see that come as well in sort of South Africa and Mozambique. Again, we've got experience in the management of those different types of initiatives and so on, which is why we emphasize the need for investors to find the right local partners who have better insight on the regulatory environment within that geography, and who also understand the dynamics throughout the continent in order to bring that experience to bear on a particular sort of project or initiative.
Well, that's a really wide-ranging portfolio of projects. I know it goes even deeper, but thank you for taking us on a little tour of the continent to talk about some of the important projects that you've been involved in, into one that I think many people have exposure to, and that is the one you started with, which is the Gautrain. And maybe we could just pick it apart a little bit more and go deep for the people to understand the role that Standard Bank played and how that was structured. Now, I think anybody who has traveled to South Africa has a sense for the importance of the Gautrain. It was put in place in time for the FIFA World Cup in 2010, if I'm not mistaken. Is that right?
Yeah, it was developed before then, but by the time the FIFA World Cup came, the Gautrain infrastructure was up and running.
And so you talk about how successful that has been, and I take it that you measure success in terms of ridership and the impact that it's had on the ability to navigate through the most important province, and well, some might say the most important province, but certainly the most important commercial province in South Africa. Talk to us a little bit about how that deal worked as an infrastructure project. Was it a public-private partnership, and how did the financing work for the Gautrain?
Yeah. I mean, the Gautrain, I think, is a very, very useful example of how public-private partnership can work if all the parties to the partnership are driven by one goal, i.e. ensuring that the project is both socially and economically or commercially successful. So I think there was massive alignment across the different players, ranging from the private sort of companies that participated in the Gautrain, the local construction company from South Africa, a sort of rail sort of operating company from the Americas, North America in particular, as well as local sort of financier and international financiers who participated in funding and enabling the Gautrain. The roles of the different players were properly defined upfront. Who was responsible for land assembly, where the train was going to be developed, and that naturally was the government sort of responsibility. Government executed exceptionally well in its responsibilities in that regard, which also included community sort of consultation involvement, compensation where that was warranted, opening up the process for public comments, and as and when there were issues that were raised, ensuring that those are appropriately taken into account in the development stage or phase of the project. Two commitments that were made by sort of the sponsors, i.e. the investors into the project, the local investors as well as the international investors with regard to their sort of social responsibilities and ensuring that those are baked in the development of the project and are structured in a manner that creates transparency as to how those will be taken into account, whether they are related to the employment of sort of local labor where appropriate, the use of local material in the construction of the project where appropriate, and ensuring as well that the skills transfer from the ongoing operation and maintenance of the Gautrain sort of infrastructure to sort of the setting up of a company that brought together the right sort of teams from across the different players and ensuring that that is professionally run and ring-fenced from undue influence in particular of government and government, the transport department of government in sort of in particular. I think the other element, which probably is in my mind the most important, just given the lessons that we've seen in the other projects, is the financial structuring of the Gautrain development. I think the risk distribution was very clear and well sort of put together. The funding structure was also put together in a very, very balanced and in a much more sort of robust sort of kind of manner to strike the balance between the risk that the government was taking relative to the risk that private investors were taking, and ensuring that that is structured in a manner that effectively allocates risk and returns appropriately to all the players. The added element in the financial sort of modeling and structuring of this project was around creating certainty on the sort of the pricing structure. Gautrain set its own tariffs, of course, I mean, after due regulatory approval, but the certainty as to what the rules are, there isn't change in the sort of rules midway just because national or provincial elections are coming up and then suddenly government changes the rules with regard to pricing in order to be populist. There is none of that with regard to Gautrain. So the rules of the game going forward from sort of a consortium point of view when it comes to matters financials are very clear, and the certainty with regard to those. That is on the actual sort of Gautrain as a project, and now it's no longer a project, it's now sort of a running sort of a business sort of entity. But there are other additional elements that have been helpful. I think we reflected on one with regard to ridership. Pre-COVID, the Gautrain sort of trains were all sort of full. In fact, they were running at close to 100% capacity because they're priced appropriately and the routes that have been identified and were being serviced were routes that were so critical to the economic functioning of the country and were connecting the right nodes. the airport to Sandton, which is a very, very big sort of economic hub within Johannesburg, to the Johannesburg CBD, the main transportation mode that connects the rest of the country, essentially, to the capital city in sort of Pretoria, with all the smaller sort of stations and economic hubs in between. Those trains were literally nearly full throughout the day. So it wasn't a shortage of demand. Hence then the current plans that are looking at expanding the infrastructure and the network of Gautrain. It is also well run and well managed, which I guess is a very, very important sort of point to also take into account, which is completely different to how sort of public trains that are managed and run by a government entity are effectively serviced at the moment. If you compare Gautrain to Mercer, which is a state-owned entity that manages and runs commuter trains, it's chalk and cheese. Mercer is falling apart, the road network has been stolen, electricity lines have been stripped, train stations themselves are dilapidated and so on, whereas Gautrain is the exact opposite. The facilities are clean, they're well maintained, the trains are well run, they're safe, well secured. It's just chalk and cheese, literally. And I think it is actually a very, very good model and a proof point that good public-private partnership can leverage the best of both worlds to the benefit of the general public in a manner that is commercially viable. And I think it is a model that ought to be emulated and expanded to deal with some of the infrastructure challenges that we have throughout the continent.
Well, extremely well said, Kenny Fihla. And on that last point, it is a shining example for not only Africa, but for the world. You can hear from my accent that I am American. And certainly the US has just passed a big infrastructure bill because it lacks anything like the Gautrain in its major centers. We're constantly saying that whenever I take the Gautrain, that we need something like that back in the US. And I was a little surprised when you said that there was a U.S. rail company involved in doing this, because certainly I think South Africa.
It's Canadian, actually. It's
yeah.
Okay. That's why I use North America, broadly speaking.
Yes, I knew it wasn't American because America South Africa in that regard. And so, I also noticed that Standard Bank has supported it. Understanding Standard Bank's involvement in the financing should have been obvious because you're a Standard Bank and Africa is your home. But I know that your headquarters you built after the installation of the Gautrain. Your headquarters in Rosebank is right adjacent to the Rosebank station. So I imagine that you have a lot of staff that commute to work using the Gautrain, and so you're contributing to the utilization of this and changing patterns and behavior, making public transportation very viable by connecting, as you say, important hubs so that people can get to work using public transportation for the thousands of people who work at Standard Bank's headquarters in Rosebank. So what you just said puts a lot of pieces of the puzzle together for me. So Kenny Fihla, I know that we have exhausted the time we have with you today, and I want to thank you so much for sharing all of these insights with us around not only the Mercer report, but infrastructure in Africa, and quite importantly, the examples that you've provided of the many infrastructure projects that Standard Bank has been a part of. It's been a real pleasure to speak with you today, and I hope that we might be able to get you back to speak to our listeners again on some other topics in the future, because this has been just a very enlightening discussion from someone who sits at your vantage point. Thank you so much for your time today.
No, thank you very much, Teresa, to you. And thanks as well, to all the other colleagues who have made this interview possible. Cheers then, and all the best.
Thank you so much. This is Kenny Fihla, Chief Executive of Standard Corporate and Investment Bank. Thank you very much, Kenny. Bye-bye.